Why are you losing money as a trader? As traders, we all lose money, as in we have some losing trades here and there, a bad month here or there. But if you're consistently losing, don't worry, you're not too alone. There's a lot of you out there. But with the experience we have here at SMB, we can help you. So we're going to look at 5 key areas why you might be losing money, and we're going to dive right in. Hi, I'm Merritt Black, Head of Futures for SMB Capital, a proprietary trading desk based out of Midtown Manhattan. So the first reason that I see people losing money consistently is because they don't have a good, what we call higher time frame read. Okay? In our group, when we teach, we talk about developing a narrative, developing a thesis, developing the big idea, using a higher time frame, and developing skills, laws of market dynamics, ways to see what the market's up to, the story that's unfolding, as we call it. And that's how we see our overall risk-reward landscape and what the market's up to. And if the market doesn't continue doing what it's currently up to, that's meaningful information for us. That's a shift in what we call the current market condition. So how good are you doing at reading that current condition, seeing the higher time frame, quite simply seeing the key levels, key lines in the sand, as we call them, key inflection points? That's a skill in and of its own. And there's a lot of traders out there who don't frame context, as I'm discussing it here, nearly good enough. It's a very, very lacking skill. It doesn't matter how good you are at recognizing a shorter term pattern on the lower time frames. If you can't see the context of that situation well enough, you've got a headwind, right? You've got an uphill battle in front of you there. So get the higher time frame down, get that narrative down, be able to see what the market's up to and what the key levels are. Personally, I think market profile and volume profile are fantastic tools to frame this, to simplify some higher time frame information down to meaningful, usable, workable thesis and things that you can use to do better. Secondly, timing, right? There's other people out there, maybe this is you. You've got a good read on, let's say, volume profile and what the market's up to, whether it's in a big fat balance area or whether it's trending or whatever's going on. You can see those things and you know what it's up to, and therefore you have a pretty good directional bias in mind and whatnot. But you can't seem to get the timing of the trades down, right? If you don't time it right, you're still wrong, even if your idea is right. So timing is huge. Are you fast enough? The lower and lower time frames you go to, the more problems I see people who aren't quite quick enough on the trigger, whether that's due to some form of psychology issue where there's a hesitation, a fear, an uncertainty, whatever it might be. Those things need to be addressed so that you're able to act decisively when the conditions are right to do so. Another big thing I see, it's quite simple, but it's impactful, is that people aren't prepared enough as the market comes into a situation where it's almost time to buy. This is the time of the trade sequence that we call stalking the trade. Before that, it's all about the analysis and, okay, I'm not even interested in this market. Okay, but now it's at a critical inflection. Okay, now it's telling me that the trade is on. Now I'm stalking the trade. When it's time to stalk the trade, you got to be 110% on that market, focused, not looking at your phone, not watching TV, not in a chat room typing something out. You got to be focused on executing. And so preparedness is huge for increasing your speed of going and being able to time trades and execute them well. What kind of timing tools and skills are you using or have, right? What tools are you using? What skills do you have? Have those been assessed? In our group mentoring and whatnot, we're all about assessing the skills that you have and highlighting the ones that you don't have so that we can teach and grow them. For me, a big part of timing is about understanding the rhythm of the market, how it kind of ebbs and flows per a given volatility situation. Also, order flow. Whether you call it order flow like I do, whether you call it reading the tape like Bella and Steve do, it's all about it. It's down to the nitty-gritty of what are buyers doing right now? How aggressive are they? Are they absorbing? Are they showing size? What's going on? What are sellers doing right now? Are they aggressive? Are they absorbing? Are they showing size? Are they weak? Are they strong? That is what's really going to help you avoid kind of getting run over by a freight train from time to time, because you're right there with the pulse of the market by using the tape, reading the order flow. It's a critical skill for helping with the skill set of timing. Thirdly, trade management. This is a big one that I see in our groups and our students. People will develop really good narratives, big picture view like we talked about, really great levels. They come in, they time the trade well, and then what happens? The trade management they get in their own way. We have students who what we call mastermind the trade, which is a sarcastic phrase because they're essentially being idiots with their masterminding of what's going on. They're really getting in the way of the trade, just letting it work. So trade management is absolutely critical. So some of the biggest problems I see with that typically are around stops. Initial stop placement is something that needs to be assessed, needs to be tested, needs to be back tested, whether visually or quantitatively. You need to look at how much room the trade needs to work, and that needs to fit within your overall trade plan for, are you someone using order flow and whatnot to quickly get out, but then you'll need to do what? Quickly get back in. Or are you the type of trader where you want to use wider stops and really give the trade room to let the full idea work out? You really get to choose which of those two traders you want to be. I personally prefer to be a little tighter and have some re-entries and things like that, and take a little less heat and maximize that risk reward. I think reading order flow and whatnot helps do that. But it's really important that you figure out what type of trader you want to be and how you want to place stops initially, because it can kill you even if you get the higher time frame right and you get your timing right. It can still be wrong. Another thing is moving stops once the trade starts to work. That's a big one. All those natural emotions and different things come into play here where you want to protect profits, so you aggressively kind of trail a stop or move it with momentum or whatnot. And a lot of people take themselves out of really good trades, especially on the retail trader side. You see that a lot. The more and more I think you get towards institutional type trading, granted they are trading typically higher time frames, the more they give trades room to breathe, to not be taken out by simple noise, if we could call it that. So really consider initial placement and then how you manage those stops if and when you move them going forward. I know I teach my traders to keep stops very, very stable away from things, typically in a more ranging type market. But if you are in more of that momentum, higher tempo trending market, you can trail those stops a little more. Not too tightly. Granted, if you're just a momentum scalper and you're only trying to capture a direct leg, and as soon as it starts to turn on you or whatnot, you want to be out, fine, trail to your heart's content, because very tightly with the momentum, because that's what you need to do. Again, you've got to pick your identity. You've got to decide what kind of trader you want to be, and then you've got to go execute that trade management flawlessly. Number 4, this is a huge one, lack of process. Do you really have that trader identity that I was just talking about? Do you know the exact type trader you want to be? And have you gone from that general identity, mission statement type thing down to the nitty-gritty of developing processes for how you time trades, the time frames you operate on, the tools that you use and how you use them, how the tools work together, how you might handle dissonance? What do you do with confluence? What's your risk plan? How do you handle moving stops? How do you initially place them? Documented process. plans for the way that you operate and do these things. You need to have this because when the going gets tough, you need something that you can lean on, something that you can revert back to and, be your rock, that you find that stability when the chaos is there, whether that's from market chaos or from your own internal chaos with emotions and whatnot. You need to develop process. Most people have not developed proper processes for how they go about operating in their trading business. Which brings us to our next and last point, number 5. Maybe your problem is that you have process, but you're unable to follow it. We see this a lot out there. Oh, my system told me to do the right thing, but I just messed it up. I got in the way. Trading's all between your ears, all these type things, right? It happens to humans all over the world. Having a process is one thing, but then being able to execute on it is another thing. That's why I listed them as points 4 and then points 5. They're different things. So if you are struggling to execute flawlessly on your process, I can't strongly enough urge you to take a look at the work and the blog and the books of Dr. Brett Steenbarger. He has some fantastic resources out there on being able to self-coach, minimize errors, play from your strengths, all these type things. And speaking of playing from your strengths, that would be my kind of initial advice for you if this is what you're struggling with. Check for alignment, right? You take your car in, you get it checked for alignment. Take your trading to the shop, get it checked for alignment. How does your trading identity that you've carved out, and you do have your processes in place, right? And all your business plan and the time frames you're operating on, and whether you're a momentum trader or looking for more mean reversion stuff or a combination of the two, what are you doing specifically? And here's what's important. How does that align with you, who you are, your strengths, where you've been successful in the past in areas of life outside of trading? How does your methodology align with who you are and your strengths? It's very important because otherwise you run into some ownership problems. If you don't really own a trade, any of you who've been trading for any time, if you don't own a trade, if you don't accept the risk, if you don't fully take responsibility for a trade idea, you're not going to be able to go execute it flawlessly in any consistent manner. If you get your ideas from Twitter or someone else, someone gives you a hot tip or whatever, you put the trade on, you're much more likely to botch one of those trades because you're not fully bought in. It's not your trade idea. And to go a little deeper psychologically, a lot of people actually look for those trades because it gives them discomfort relief psychologically because they don't have to take ownership. It wasn't their idea. So take a look at that as well. So number 1, how's your higher time frame read? Can you see what's going on in the market, what it's up to, where that would change? Assess that. Take a look at what you've done in the past and take a look at how good of a job you are doing at seeing the key levels day in, day out. If you don't think this is possible, for those of you at home who think, well, that's crazy. All we can do is let the market start to trade each day and see where the levels form and then go from that forward. It's simply not true, guys. You could, and this is not a pitch, it's just saying, hey, check it out. Our room where I post my levels every day, it's preposterous to think that based on the precision of those levels and just how often the market turns from them and they are significant after the fact, that it's preposterous to say that that can't be done. Come take a look for yourself. So have the higher time frame read, work on your timing skills. Perhaps you need to grow in some of the tools that you're using, right? Perhaps you need to learn how to use a footprint chart. Perhaps you need to learn how to use cumulative delta, things that can quantitatively make it easier on you, your cognitive load in real time, to assess the strength and weakness of the buyers and sellers. I really recommend not to be archaic, if you will, like it's 1994 and just stare at a time and sales window. There's much, much better tools these days. Number 3, trade management. How are you approaching this? It's a part of your trader identity. How are you placing stops? How are you managing stops once things start to work? It's very important that you get those right with the knowledge that it will never be perfect for all trades. That's the thing that botches a lot of trade management for people is they tend to think, oh, well, that wasn't ideal with the benefit of hindsight. So therefore, if I just would have done this, it would have been perfect. So I'll do that next time. And then they use methodology B instead of A. And then the next time B was the better one or A was the better one. And you just keep missing. Find a way where you're happy with the misses because it'll never be perfect. And then process. Either you don't have a process or the last one, you're unable to follow your process, in which you can take a look at alignment with strengths and things like that. So 5 tremendous ways that I see all the time across Twitter, across students, junior traders, you name it, struggle in these areas. And we can really help you with them. What do you need to do besides all the 150 things I've said so far? Quite simply, you need to track your results. You need to study and interpret the meaning of those results. And then you need to implement changes. Not 20 changes at once, but 1 change at a time. Track what you're doing. Keep your statistics. Take a look at how things are evolving. Assess as part of your end of day review, how good of a job did I do today at seeing what the higher time frame was up to and where the key levels were as before we come into the session. How good of a job did I do at that today? Can I get better at that? Can I continue to develop that skill? We have 4 other skills you can develop too. So track, study, review, and then implement incremental change. And I promise you, you will be unable to prevent getting better as a trader. So if you like what you've heard, please head over to smbfutures.com. Take a look at how you can really get way deeper into these topics with myself through our mentoring classes, through our Futures Foundation program. Have a look at smbfutures.com and trade well.